1st of September 2016. It's 8:01 a.m. Chicago time and 9:01 a.m. Eastern U.S. time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The driving factor overnight has been um, the Bank of Japan information that's been pushing us around. The central bank announced it would target the shape of the yield curve. It aimed to keep the 10-year Japanese government bonds rate more or less at the current level of about 0%. That came out at about 11:30 p.m. my time, half past midnight East Coast. The Bank of Japan left interest rates of excess reserves unchanged as expected. There was rumor that there was an alteration to their QE policy. That came through to in the discussion. It changed its policy framework to QE with yield control. And then the Bank of Japan's Kuroda came out and said that the easing made Japan no longer in a deflationary state. And so there's a lot of movement of capital around the globe overnight. That with mixed with the Fed Day announcement today. Remember, the Fed is due to announce this afternoon at 1 Central, 2 Eastern, after the FOMC meeting. So today is driven by monetary policy. And then in addition to that, those of you who are trading crude, you probably noticed that we had a pop-up after the close yesterday. The crude was up 2.2% at about $45 a barrel. That's the WTI crude oil product. Because the API number showed a draw of 7.5 million barrels versus expectation of a build of 3.4. That's almost an 11 million barrel swing to the downside to the draw. So that's pushed crude around. But as far as what we're expecting going forward for today, we're looking for crude oil inventories at 9:30, the DOE inventories at 9:30. The expectation is for a surplus of 3.125. Of course, we're already pricing in a draw on that product. Distillate inventory is expecting negative 400,000, and gasoline inventory is expecting negative 950,000. And then following that, we have the FOMC announcement at 1 Central, 2 Eastern, with the press conference with Yellen happening at 1:30 Central, 2:30 Eastern. That's what's shaping us for the day today, and it likely to drive our trading session. As far as what we've got for yesterday, there we go. Let's switch gears. So yesterday's primary hypothesis was for, if you recall, yesterday I marked up this chart to show that we have one time framing up, which is market profile speak for a trend up. So we have one time framing up, the market's channeling up, but the way it's trading is it's moving to the extremes of the channel, right? It's going all the way up and down, and so on. But yesterday, and we're still trading last Monday's range, yesterday the key expectation was for a quiet-ish or an open auction on the open, and for the market to struggle to stay, to push higher, looking for the test of the overnight low. But ultimately, the target is for yesterday's point of control at 2136. I did speak about watching that low volume node left behind from the day before closely. That was the 2139. But the first target would be the prior day's point of control, and then the second target would be the composite point of control, the point of control for this entire area's balance and this profile, right? So that was the primary idea. The secondary idea for the day is for it to push down, fight to push down into the point of control the prior day, bounce up, and then start to move back again, holding this this upward channel. Let's see what we got. Here's what we got yesterday. There's the test. If you recall, let me just put this back a second. If you recall, the overnight high was 2142 and a quarter. 2142 was the opening swing high. Did not take it. Finally took out the overnight high. Rotated to the other side through this low volume node. Came back to 4350. It looked like hypo 2 may already be in play. And then we finally got this drop, pull back to the mid. This was the first opportunity for me to do anything. And then it rotated down right to the 2136 right there for a quick pop of 1.75 points. And then a push through to 3450. Another opportunity at the mid here. Mid and VWAP below the opening swing against the LVN. Lots of confluence there in this setup. And still looking to target this 2129. That was our key target for the day. Rotates back down 9 points basically. And then starts to drift back up to the mid again. We have a new mid, as you can see the mid dropping. New mid, and this rotation was only good for about 2 points. And so I started to give up on this idea of 2129. The market was balanced, and then lo and behold, on the close, boom, it gets this pretty good rotation from about 2139 again, 2138.75, down to 2129, and we miss our target by a couple of ticks. 3 ticks. And so that's where we ended up with yesterday. So overall, hypo 1 was in play. All right, very cool. Overall, hypo 1 was in play and played out completely. Didn't quite get the target, but good enough for what we're doing here, which is not landing rockets on the moon, just trading value. And so yesterday worked out pretty good. Multiple, as I said, multiple pushes into the mid here that made it a little bit easier to read, in my opinion, than prior days. Overall, the market's traded pretty well. The session ended. If you look at how this was how yesterday traded. Just incredible movement by crude oil. Just holding the black line is crude, and then there's everything else. And this is all zeroed out at the open, at the Wall Street open at 8:30 Central, 9:30 Eastern. And I'm comparing the performance of many different products against each other. You can see crude just completely detached from everything else, with small caps and financials leading the push down all afternoon. So here's the financials are this line right here, the XLF. And you can see the financials just dipping well ahead of everybody else, and then everything else follows. And then the small caps ended up taking winning the race down on the close. Pushing us and creating this pretty strong delta. We have not seen delta drop this hard in quite some time. So if I go back to as far back as I have data in this contract, it's been a while since we've had a delta that is as low as negative 52,000. So I don't even have a day for it here. So it's been a few months, pretty strong selling on the close. Where are we now? The overnight session. The key things to pick up from the overnight session are the dip here on the Bank of Japan announcement. That's the market's reaction. The market expected more out of that. And then we ended up rallying into the European Open, and we're holding in the middle. The mid is right below of the session at 21.35 and a quarter. I want to point out that yesterday's day session, which is this gray and black profile, is inside of the prior day's session. We have a narrow range day with some pretty decent volume. Yesterday's volume is 1.18 million versus 1.35 on Monday, and then the overnight volume tonight it was 191,000 yesterday. It's 215,000 today. There's the higher time frames fairly active. We do have a positive price inventory here. Positive overnight inventory on price, but overall in volume we're flat. Because of that, I'm expecting sideways open again. So the only thing to glean from last night's, again, 21.38.50, 21.39, which was the LVN from the day before or 2 days ago. And that was a key kind of a turning point yesterday. You see here 21.38.75 was as far as the market could push up, as far as buyers could push up before sellers came in and slammed it down on the close. So coming into today, we're trading 21.37.38, right smack dab in the middle of this balanced profile, completely Gaussian. The value area is valid. The value area low is 33.5. The value area high is 40. And it's trading right in the middle. The expectation, again, is for a fairly choppy open. Remember, FOMC this afternoon. The expectation then is to push to the upside, test just above value high, find sellers, push below, and then hold this pattern in the middle. We are compressing. We're getting lower highs and higher lows from the prior day. And what this is looking like is a market that's in a holding pattern with volume building up in the middle pretty well, which sits really well with the fact that the FOMC is about to make an announcement. From there, whenever the FOMC comes out, let's call this the FOMC. I'm going to try to draw on this. This is really dangerous here. Yeah, try to write on the screen. Not very good. Nope. So let's assume the FOMC comes in here. The expectation is really unknown. The market's pricing in no change in policy, which is likely to see a pop, but I don't expect this FOMC to be incredibly aggressive today. I think everybody's already priced in what their expectations are, and their expectations are not radical. So who knows what's going to happen after the FOMC, so I draw the line there. The expectation is that we test both the value high and low. Again, I want to remind you there is compression here, so balance that is building over time tends to lead to imbalance, which means the market could push into a trend, which is the secondary hypothesis, is to test lower to check yesterday's selling spree to see if those guys are still available, and then look to push up and then push out to break the high. This was the same idea as yesterday, but this is the second day of balance. It could have a lot more energy. Again, the target for Hypo 2 would be 52 even. That's how things are shaping up, and that's all I have for you. Good day to keep your bullets dry, or the powder dry for the session. as we are confronted with a news event here in the afternoon. So just bide your time, relax, pick your spots. Opening in value against the point of control means there's likely to be turbulence, both two-way trading because the volume went off in that area. And so it's not smart to commit early on to whatever bias you're coming in with on the day. And one more thing, a quick reminder. We're not here to impose our ideas on the market. I keep saying that, but I don't think it's coming through to many. We're not here to decide what the market should do and to execute that. That is not the idea behind these hypotheses. The idea here is uh, to sum up what could happen and then to trade what actually is happening. So let the market color your bias as opposed to coming in with the idea that the world's coming to an end and it can't sustain these prices and earnings, the PE ratios are too high, blah, 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 all that stuff. Just take it day by day. And trade what the market is actually saying. You cannot overcome the forces within the market unless you're running a few $1 billion fund. It's just smarter to just see which side is winning and then just to be the little guy that fights on the side of the winning team. That's our goal. Good luck. Take care.